All right. All right. Thank you very much, Adam, for the introduction. And hello, everyone. Pleasure to speak to you today. My name is Hadan Espiridio, and I'm the BD lead with the Alex Lab Foundation. I guess a little bit about myself. My background in college was physics. Right after school, I went into banking at Goldman Sachs. I was there for a number of years. That's where I made contact with Alex co-founder Chanda Shu. I've known her for about 12 years now. I worked with her when she was writing her book, Rule-Based Investing. And so as far as the beginning of Alex, it's really a protocol whose core team consists of a lot of veteran Wall Street quants. These are the teams of people who build algorithmic trading mechanisms and quantitative models that uh, generate these billion-dollar businesses on Wall Street. And with the emergence of crypto, and especially with that summer of DeFi of 2021, co-founders Chanda Shu and Rachel Yu were discussing just the sort of advancements that they were seeing in the field of DeFi, how this was, clearly indicating that this would be the direction that finance would go in the future, and how they could not just be, participants, but also be builders and shaping how it would turn out. And so they decided, after speaking to some other chains that were popular at the time, like whether it was like Solana or Avalanche, they came across Stacks, and speaking with Munib and Professor JP Singh, were really taken by the core thesis of Stacks as a whole, of bringing smart contract functionality through Bitcoin layers, of proof of transfer, recycling Bitcoin's proof of work into a unique consensus mechanism. And on the whole, um, our vision of when Alex was going to be built is that not that we were building it to compete with liquidity on Ethereum or Solana, which is where almost all DeFi was occurring at the time, but how could we build a DeFi that had the potential in the future to compete with traditional finance itself? And so it was our point of view that in order for DeFi to really gain mass adoption, both in terms of retail users as well as institutional investors, it had to be built on the immutable and secure foundation that was really unique to Bitcoin. And that's what led us to make that sort of contrarian call. In 2021, by the fall of 2021, I remember October, we started our test net. And then in January of 2022 is when we launched our mainnet. And so, when we launched our mainnet, we were really just focusing on the standalone DeFi primitives. It was an AMM DEX, a launch pad, being able to stake, yield farm. And then it wasn't long after that we sort of got into the fall of what would become the sort of crypto winter, which probably you can mark it with. Fed began to raise interest rates. This caught a lot of players in the space off guard. In particular, it was one of the triggering factors that would lead to the implosion of Terra Luna, which was, I think, the third or fourth largest stablecoin at a time. It was like a $40 billion wipeout. In the months that followed, there would be other major players such as Three Arrows Capital that would also fall, and it would really culminate in November of that year with the FTX implosion, which really marked, for that kind of cycle, the lows that we saw in Bitcoin and Stacks and Alex. And so, it was quite a roller coaster ride to sort of launch with Bitcoin near its all-time highs at the time. I would think it was around 65 or so during our test net, to then, just having the market really crater in a major way, and then just adapting to a bear market where so much of your focus is just on retaining, cash, and really surviving through the winter can be one of the most bullish things that you can do. And we were fortunate that through our team, particular credit to our COO, Rachel Yu, who kind of saw us through that period. We sort of made it through, and then quite unexpectedly in January, we sort of saw this rebirth of Bitcoin through the Ordinals protocol. When Casey Rodarmore launched the Ordinals protocol, his goal was simply to make Bitcoin fun again. But the effects were really much more far-reaching. And that really, with Ordinals for the first time, Bitcoin became more than purely a money layer. It also became a data layer. This was really the first time we saw Satoshi trade for more than its monetary value. It now traded at a premium due to the data that was inscribed on it. And it was, I think, barely 2 months afterwards that Domo posted a tweet about experimenting with how to create a fungible standard through ordinals. It was the tweet which deployed the ORDI token. Within 24 hours, ORDI was minted off, and then BRC20 Fever really took off. And it was clear to us then to pivot and make a shift back towards the L1. 2 months later, we took a lot of the infrastructure that we had been building around creating an order book DEX-like experience on Alex, and we used it to create B20, which is the BRC20 order book. And so our vision was really, and this I think speaks a lot to the to where we are now in looking at the strengths of the Bitcoin L1, its security and immutability, and also grappling with what some of its real limitations are. It is the case that it's physically impossible right now to onboard 1 billion people onto Bitcoin. The network just simply isn't built for it. Bitcoin, it isn't a programmable L1. Um, and so when we look at, say, using BRC20 purely through the L1, as was occurring with partially signed Bitcoin transactions, the same as you can find now if you go to, say, the Unistat marketplace. It isn't the most intuitive user experience. It's great if you have the familiarity with the tech to interact with BRC20 tokens in that way. But for a lot of users, they're used to the experience that you might find on other chains or on a centralized exchange, where you have bar charts, you can place limit order, market orders. And so this is what we really focused on creating. Step one was really we built the Alex bridge that allowed users to bridge in BRC20 tokens onto the Stacks L2. The Alex bridge has since transitioned into the X-Link bridge. And then with those tokens on the L2, you now had smart contract capabilities with them. So you could trade them on the B20 order book. You could also interact with them on an AMM DEX. And then from there, we saw what were the other needs in this particular space, inclusive the fact that when you look at standards like BRC20, billions of dollars in market value, but as far as the Bitcoin chain itself can see, it just sees Satoshis moving around. The Bitcoin protocol itself, it doesn't parse these JSON texts. It isn't keeping track of a global state of ledgers. That's actually being done entirely by these off-chain indexers, which then introduces a centralization risk. And that if you're relying entirely on a single indexer to tell you if a particular transaction is valid or not, if that indexer makes an error unintentionally or due to malice, that really compromises the integrity of the space as a whole. So that's where, we began on our side building what's now the Bitcoin Oracle, which is a consensus layer where multiple off-chain indexers all agree on a consensus layer with M-event consensus as to whether a particular transaction has taken place or is valid. And furthermore, we use the Stacks L2 ability to natively read the Bitcoin state to independently verify that a particular Bitcoin transaction has been mined. And so it's a stepping stone towards greater decentralization, but it definitely allows users to transact with BRC20 tokens with greater confidence, knowing that there's a consensus of multiple key on-chain indexers agreeing to a particular event than on a single entity. Um, so then, along those lines, and in speaking to you with the workshop, I'd like to address, what we see, and from our experience, what are some of the challenges of building in Bitcoin DeFi space. On the technical side is the fact that Bitcoin script itself, it's very limited. It's hard programming directly on Bitcoin core protocol to sort of do very much. Bitcoin, it's really built to be very, very robust, to be resistant to government interference. And we love it for that. But to the same extent, it's very difficult to have changes made. And that can be seen as both a strength or, in turns, say, between 2016 and 2023, when people say Bitcoin really didn't do much, they could see it as detracting from it. But from our perspective, it provides an opportunity for L2s such as Stacks and others that are being developed to fill in that gap. Um, and so then even with, say, when you're coming to Stacks itself, it is a decidable language. It does have that kind of technical barrier as well of learning to use Clarity. There are enormous resources on now for how to use it, but it is a change from say Ethereum with Solidity, which already has a very well developed dev community, to Clarity, where it is still emerging. And so, something that Alex has focused on, having in mind that we want to help, in as much as possible, create a thriving Bitcoin ecosystem, is that we've made, our software development kits available with composable blocks of code that you can use, public APIs, and also we have, we've created the Bitcoin Lab Ecosystem Fund by co-founders Chanda Shu and Rachel Yu, to provide initial investments for projects that are building on the Stacks Alex Bitcoin DeFi ecosystems. We're working together with the Bitcoin Frontier Fund on how we can collaborate and take those projects that are building on that track and advise both in terms of tech support as well as review of tokenomics, introductions to our network of investors, really community introductions, because using the launch pad on Alex, it's really almost more of a community building exercise than necessarily a financial raise. Just today we crossed 50,000 active wallets on Alex. These are a lot of core Stacks users who are hungry for alpha and for emerging projects. And so those projects that launch on the Alex Launchpad, we do co-marketing, we hold AMAs, we want to introduce them to our community as thoroughly as possible. We go through the Launchpad process, which is done through a fair launch lottery IDO. And the past two projects that we've launched, the Ords Games BRC20 token, as well as Orange Crypto, also through a BRC20 token, were 81x and 32x oversubscribed, respectively. So there's definitely a real demand there, particularly as we are entering into this bull market cycle, for new opportunities for people to potentially put their capital to work, and really continue growing their crypto and participating in the growth of Stacks overall. And so one of the major challenges with Bitcoin DeFi is the tech, is these sort of coding. And again, please reach out to Alex. Consider us a resource. We want to see as many of you succeed as possible. And another particularly unique to DeFi is also there's a bit of a financial barrier, because there's a lot of DeFi functionalities where you need a minimal amount of bootstrap liquidity for the functions to operate properly. So you can repo the code for our AMM DEX, but without sufficient liquidity providers to get the liquidity going, the slippage on the trades is going to be so massive that it isn't really usable to traders or to users as a whole. And so Alex, as we've transitioned more from standalone Bitcoin DeFi more towards a Bitcoin finance layer, where we want to bridge the Stacks L2 to other Bitcoin L2s. We want to bridge it to the Bitcoin L1, not just the BRC20 tokens, but also the Bitcoin L1 asset itself, as well as to multi-chain liquidity, which we already have EVM bridges to Ethereum and to Binance. We have increasingly created aggregate liquidity, where apps that are a part of the Alex ecosystem can draw on our 100 plus million TVL, so that liquidity is there, so that once your DeFi projects and functions launch, not only have they been sort of like mentored, have we done the sort of code review, gone through the ideal launch process, but now you're launching with the same aggregate liquidity of the Alex ecosystem. And so it's one less hurdle, and that really eases that transition and allows us, to grow together that much more quickly and that much more successfully. And so those are some of the key support mechanisms that we have for builders and emerging projects. And as far as those go, again, please feel free to reach out to myself, reach out to Chanda on Twitter, to the Alex Twitter account. It's something that we are really have a keen eye on cultivating going into this bull market cycle, is that we want more builders. We really see this as what is key to creating and kicking off a flywheel of positive growth, where new projects that launch bring new users, new opportunities. This grows ecosystem TVL in the whole, which then attracts more developers, more projects, more builders, and so the cycle continues. And so do reach out for us for assistance, no matter at what phase you might be on. We're happy to advise. And as BD lead, I'm really glad to schedule Zoom calls with you guys anytime. That's really what I see as one of my key functions with the Alex Foundation. Um, to discuss a bit what we see as some of the future trends that are shaping Bitcoin DeFi. On Stacks, something that will definitely be very key, which I'm sure you're all familiar with, is that we are maybe just a month or so away from the Stacks Nakamoto release, which will decrease Stacks blocks times from Bitcoin blocks times of about 15 minutes on average to potentially 5-10 seconds, which will really be transformational in terms of a user experience. And we really see this as a huge unlock because, to share the sort of feedback that we've consistently received is, when we launch a new or exciting functionality, say a Launchpad IDO that is very popular, or when we launch the B20 order book, a lot of users that come from other chains and try Alex, one of the major points of friction is the transaction times being 10-15 minutes. To them, it's just sort of too long, and that has made retention a little bit difficult. And we see really Nakamoto as being key to creating a user experience that's much more akin to what people are used to on Ethereum layer one, and is much more aligned with what is the sort of modern user attention span, which is really seconds and not in minutes. And as well as SBTC, which will be unlocked a few months later, which is really pivotal because with SBTC, we will have what is to date the most trust minimized representation of Bitcoin on the smart contract chain. On Alex, we list multiple varieties of wrap Bitcoin, from XBTC, which is with wrap.com and Anchorage as the custodial agent, to we have AEBTC, which has Allbridge as the wrapping agent. there's a BTC, which is an Alex multi-sig federated BTC, and that we created as a very practical solution because a BTC, you can bridge that directly using the X-Link bridge to either Ethereum as WBTC, to Binance as BTCB, to the Bitcoin L1 itself. And then SBTC will be this trust minimized solution, which has an open and dynamic federation. Whereas before, either you had a very centralized wrapping entity or you had a fixed federation, say with the Liquid network. So with SBTC, this really is a tremendous innovation and will likely be for the next several years um, the most trust minimized solutions that we can have with Bitcoin bridging. Because entirely trustless bridges that rely purely on smart contracts, that isn't possible on the Bitcoin L1 at the moment because it isn't a smart contract layer. And so SBTC, we believe, will be a huge unlock towards really, and this is kind of the holy grail that we have in mind for Bitcoin DeFi, unlocking that $1.5 trillion in Bitcoin value to participate on the DeFi layer to make Bitcoin a productive asset that people are actually using to invest and generate a yield off of. And with that momentum, that increasingly bringing in institutional capital as well. So those are our major unlocks that we see that are occurring on stacks. Um, we also have seen a lot of discussion around potentially new Bitcoin L1 standards, such as runes, that we are very, very excited to see how they will perform and how adoption will be. And the Bitcoin Oracle that we designed for the to be a consensus layer for BRC20, we've generalized to really work with all meta protocols. And so it'll also be used for the STX20 standard. It'll be used for the Rune standard. Because with runes it'll still be the sort of same case where although it technically will be easier to index, it isn't being indexed by the Bitcoin chain itself. And so rather than have this total reliance for most users on these off-chain indexers, which introduces that centralization risk, it is a step towards greater immutability and security to have a consensus layer of multiple key indexers agreeing that a particular transaction has taken place and the L2 ability to validate that that transaction has actually occurred on the Bitcoin layer. We with Bitcoin VM, it's still early and it is very exciting, but it remains to be seen how it'll work in process. Because particularly with Bitcoin fees increasing, besides running, I think some of the most basic protocols on Bitcoin VM that might be challenging to have work as a virtual machine to the same extent as what we're already familiar with stacks or say Ethereum, but to whatever degree that really takes hold and moves forward, we're very ready to integrate it, particularly on the Bitcoin Oracle side. And also, I think this season we're seeing a lot of discussion and the proliferation of Bitcoin L2s where with maybe the originals were things like a rootstock, RGB stacks. Now there are quite a number of new Bitcoin L2s. We're in discussions with several of them. We would like to again create a really broad umbrella. So to whatever degree we can bridge and integrate these Bitcoin L2s into a DeFi layer, we certainly will. But there still remains the open question of how these Bitcoin L2s will be implemented and what the adoption will be. And it's very likely that a handful will really succeed and do well, and very many others likely there just won't be as much attention or adoption there. But that only sort of like time will tell, but it's definitely a space we have our eye on pretty closely. Um, as far as projects examples within stacks that have integrated Alex technology, the most notable that you might see or actually not be aware of is that if you have an Xverse wallet or a Ledger wallet, you can now do swaps directly on the wallet app to the different SIP10 tokens. And actually that backend is Alex's AMM DEX. So that is something that we've integrated directly into the major Stacks wallet to facilitate people doing swaps. NFT platforms like Gamma have also used our AMM DEX on the back end so that people can potentially pay for an NFT with any of the listed SIP10 tokens. They don't necessarily just have to hold the stacks. And as we increasingly go into the bull market and see an increasing number of projects launching on the Alex Launchpad, we only expect those integrations to grow. Um, and then to quickly, I guess, highlight, I asked some of our Alex core team members what would be some project ideas or how can we what are some project ideas that can help translate a DeFi success to Bitcoin layers? We think in general, something that's useful about being on Stacks is that we have all of this innovation that has been done on Ethereum, on Solana, that we can look towards and find which use cases have been successful and which haven't yet been done on the Bitcoin layer and importing those. And so uh, some mechanism would be, for example, building something like a bribe mechanism for Alex that would help decide on how we reward liquidity providers and direct liquidity on the platform. Mechanisms such as a single-sided liquidity would be something that we would really love to see because obviously with our AMM DEX right now, it's two-sided liquidity that has to be entered. One-sided liquidity is something that has been done on other chains, and we'd love to see brought over to Alex. And third, some things like a YFI, like a sort of aggregators for liquidity, for trades, and really just expanding from there. And so yeah, so a lot of these are just kind of starting points, but I think really what's key is to build what you're passionate about. Since I think from our own experience, one of the most important qualities to have is really persistence and the belief that what you are building is important because crypto it's a highly volatile market. It is still. I do think that we're on the cusp of what potentially could be a Bitcoin super cycle, but there could be some global macro event. There could be something that occurs within crypto itself that shakes the faith momentarily, as we saw during 2022. And when there's a 90% drawdown, it's the ability to sort of keep your head down and keep building and realize that really this is, crypto, it's not so much a niche of fintech. It's really, I think if you zoom out, a bit of an inevitability. It's like almost this transition of going from typewriters to word processors, in the sense that so much of modern finance, the fact that like just the other day, like writing out a check to pay a power bill, it seems something so anachronistic. This is something that is a legacy from 100 years ago. And that still is the way that tens of trillions of dollars are traded on the daily now, where there are these, 2, 3 day settlement times. And, it's just so much of it is really, centralized and held by a very small and permissioned number of key players. And what we're doing really is incredibly disruptive to just finance as a whole. And it is our view that in the long term, things can't turn out sort of any other way. That, Bitcoin, it's more than a store of value. It really is, in a sense, the sort of future of money, that building DeFi on Bitcoin is building the sort of future of finance. And that where will we see the ultimate use case of the infrastructure that we're building today? It will be when we see the increasing tokenization of real world assets, because blockchain, it's simply a superior technology for the storage of wealth. And as we see increasingly real estate, commodities, and other financial instruments being tokenized, these tens of trillions of dollars, when they then look to transact in a trustless way, in a efficient way, in a decentralized way, they are going to come to Bitcoin DeFi because already we see with the ETFs, there's this institutional acceptance of Bitcoin that is unique from other blockchains. And you have Bitcoin being secured. I think it has to be said, the power of proof of work and how that really anchors it to the physical realm, that you have tens of thousands of real world miners, some of them these publicly traded companies that are securing the Bitcoin system versus with proof of stake, where it might be actually a handful of early holders of some of these tokens who are the ones who are principally securing. And so, when tens of trillions of dollars are being exchanged, which network seems like the sort of sure bet to go for? And so that's not to say we don't see a multi-chain future. We absolutely do. It's simply a question that I think when it comes to issues or transactions of high value, that Bitcoin will continue to be singular in that respect. And that's where the infrastructure that we're building today for Bitcoin DeFi will find its use case as we see really tens of trillions come over to transact in a very efficient and trustless way using DeFi built on top of Bitcoin. And so, thank you all for listening and for your time, and glad to field any questions. And again, if I'm not able to get around to you, please do reach out to us through Twitter, Telegram, Discord, any of our social channels. We would love to speak to as many of you as possible and help in any way we can.
Tremendous. Thank you, Hadan, for that overview. Appreciate that very much.
Thank you,
Um,
Adam.
I do want to pass this over to the group here to see if anybody would like to further explore some of the topics that Hadan mentioned and went over just now. I look in the chat, I see a message or a question here that says, can you provide an example of one-sided liquidity and its utilities and what that means?
Sure. And so, so the way that your traditional AMM pool is built is, for example, if you go to Alex and you have the Stacks Alex pool, to become a liquidity provider, you would enter an equal amount of value of Stacks and Alex. And so this is what's meant by the two-sided liquidity. And then in exchange for providing that liquidity, you receive whatever the platform fees are on the Alex AMM. Half go to Alex and half go to our liquidity providers in proportion to the liquidity that they're providing. And so an example of where one-sided liquidity would work would, for example, be something like stable swaps. Um, where you have, say, things like USDT versus USDC. So this is a pair where you would typically expect to see very little slippage because stable swaps should be relatively stable in value. Yes, in the past there have been these brief momentary hiccups in the pegs, but I think that's just part and parcel of Bitcoin still being crypto being an emergent technology. And so with something like a stable swap pair, then it can be unlocked where you can provide just liquidity on, say, the USDC side, without having necessarily to add the other side because of that slippage being low. The AMM algorithm really focuses the trading on the point of the curve where liquidity is kind of maximized. I think this is really highlighted in the sort of the Uniswap V3 V4 papers. And so this is still a little bit more on the sort of cutting edge, but something that we see in the future coming for Alex is a swapping between a lot of pairs that are relatively pegged. So if you have a SBTC and something like All Bridge wrapped WBTC, Ideally, the slippage between those two pairs should typically be small because otherwise it provides an arbitrage opportunity. And so that might be a place where if someone just holds SBTC, they could provide one-sided liquidity. Of course, there'll be some trade-off to that where the trading fees received might potentially be less. But that would be, I guess, an example of where, the implementation that users have done with single-sided liquidity on either Solana or Ethereum, we could look to implement to Alex, especially as the number of stable swap and pegged pairs grows, and users are looking for opportunities to put those pairs to work.
Awesome. If anyone, thank you for that. And if anyone else has questions, feel free to raise your hand here, and we can just call on you. You can unmute your mic, or feel free to use the chat feature as well. I want to ask kind of like a follow-on, very similar to what Kuhn's question was here, Hadan, along the lines of one-sided liquidity. So before doing that, quick story. This is the second Ready Layer 2 competition we've held. Last time, one of the co-founders of Alex was a judge in the first Ready Layer 2 competition, met a participant, a contender of the competition, and then a good collaboration and partnership came about from that connection. That was an idea that this contestant had of their own. But you started talking about some interesting ideas or what could be ideas of interest from, Alex's perspective here, and you mentioned some of those things that you'd like to see. You mentioned Wi-Fi aggregators for liquidity. Can you kind of unpack that and expand a little bit more as to, you know, early development of what something like Wi-Fi aggregators for liquidity means and what that might look like?
Um, I would I'll it's something with Wi-Fi aggregators that has been increasingly in discussion on our dev side as what could of really a potential really a building potential that we'd like to see other projects bring on to Alex. Um, to be honest, it isn't something that I can speak to all that profoundly at depth at the moment. But it's just in the quick polling that I did sort of internally, it would be something, just a potential suggestion of what we would be sort of open to. But to just sort of like expand that to a whole, I tossed some of those three out there as just a kind of a short list that I received feedback on. But in terms of just Bitcoin DeFi on Stacks as a whole, we have, I believe, coming in a few weeks, a new project that's soon to launch on Stacks of Velar. That'll be the first perpetual futures DEX on Stacks. So, perpetual futures, for example, would be another show of a kind of DeFi innovation that we'd like to sort of bring on board because I think really what's key with the ability to sort of use futures is the use of leverage, which carries with it both its benefits and risks. But I think used responsibly, it acts as a form. It can be used as almost a sort of a insurance against the particular crypto position you may hold. And if you have a concern that there might be a little bit of a market retrace, that's a way that you can, hedge against that loss a bit without having to transact or sell that sort of that particular token that you may be holding itself. Another might be, and this is still an exploration, but the creation of eventually a crypto options market where we see that in TradFi, this is something that I think particularly apps like Robinhood have made very, very, very popular to a broader spectrum of retail users. And that, with the correct, tech and build, it's something that we could potentially build out to crypto tokens as well, where you can potentially look at, I guess now with Bitcoin ETFs. There are option contracts that are on those, but those are through obviously centralized exchanges and brokerages. To have that on a decentralized code-based platform, I think would be something that would be very exciting to do. And the potential is there because in the borrow lend mechanisms that Alex has worked on in the past, we've used the dynamic collateral rebalancing equations that basically progressively shift. If you have, if you're borrowing a risky asset against a riskless one, it dynamically shifts depending on how the market goes to basically reduce the risk of sort of a hard liquidation. And so in using that, we're using parts of the Black-Scholes equation, which is really what goes behind all of options pricing. And so the potential to build these instruments is there. It just requires the code, and it requires the sort of liquidity, because of course with options there have to be, the two sides, the buyer and the seller. So it'll be incremental in developing these different functionalities, but I think progressively we will get there.
Great, thank you. Um, if there are any other, so I do see there was a question in the chat and then also answered in the chat. Love that, guys. Feel free to keep doing that. Hadan, where can people go ultimately to get started to learn more about Alex? So you mentioned, engagement place would be Twitter to ask any questions or maybe start getting in touch with people. But where can someone go to maybe just learn a little bit more about the tech stack and kind of like get a little bit better understanding as to how everything works?
Sure. So, so on our Twitter account, the Twitter handle is at AlexLabBTC. On our link tree, you can come to our main website, and there we'll have links both to the application form to build on Alex, as well as links to our GitHub docs, and all of our other social channels. Um, Oh, yeah, thank you. I see on the chat, yeah, the link tree to Alex Lab. And yeah, from our GitHub, in terms of our code repos, to our Medium, which has a lot of the milestone releases that we've done over the past 2 years, including our sort of our white papers. Those would be, I guess, great starting points to get a greater sense of kind of our community as well. You can see our Discord at discord.gg/AlexLab to use as a resource as well. And also, be sure to follow our founder, Chandashu, at Rule-Based Invest. And on Telegram, again, all those links you'll find on the sort of link tree. Just feel free to reach out to us. Mention the RL2 workshop, and that you would like to follow up, or that you have a project that you're building on Stacks, and are looking for either advice on building a robust tokenomics, which we've worked with a lot of projects with, and so that's something that we can advise on, to introductions to our network to investors, to even say like direct investments with the Bitcoin ecosystem lab funds, to the point that you have something going and then you're looking to do a token launch, or you're looking to do bootstrap some community building through Alex and through the Launchpad. Yeah, that is, what we'll provide the application to sort of fill out. We'll schedule calls and get those conversations going, and look to, facilitate that as quickly as possible, because we would just love to see more projects building, more tokens listed, more liquidity on the ecosystem as a whole. And the view we take is that a rising tide lifts all ships. And so, that's what we want to be behind in getting that going.
Very cool. Awesome. Thanks for that. And very helpful for people to know where to go to get started. Um, if anyone else has questions, feel free to hop in. We still have a little bit more time. Suli, I see you up here. Feel free to see your
Yeah.
hand up. Go ahead.
So you guys mentioned a Wi-Fi aggregator. What is a Wi-Fi aggregator? Sorry, I don't know what that is or what you meant by it.
So Wi-Fi, I guess, is typically understood to mean like yearn finance, um, which, I guess, currently it's something that's been incubated by yearn finance, incubated on Binance is my understanding at the moment. But it is, I mean, it's honestly something that I myself haven't looked at sort of too closely, myself in particular either. And so, I wish I could speak to it a bit more, but I guess it's on the whole, it tends to be like a decentralized suite of products that it can help individuals, whether DAOs or other protocols, earn yield on their digital assets. And so I guess a sort of quick summary would be, given the sort of digital assets that you hold, how to generate yield from them, either through staking mechanisms or borrow lends or swapping to stable coins. Um, but that's just a very high level overview. I have to really dig more into the details of year-end finance myself.
Okay, thank you. I had another question. I was wondering if you're familiar with like, I've seen some of the DeFi websites where you can basically add liquidity to a pool with just having one token click instead of having to do the swap yourself and then adding both. Like, I don't know, what are your thoughts on that?
Right, so that's what I was mentioning with one-sided liquidity, where there are particular pairs. I think the most obvious fit for one-sided liquidity would be pairs such as stable coins, or pairs like say two different wrapped Bitcoins that should trade relatively closely in value, where you could add liquidity on just one side, which improves the performance of the protocol as a whole, without necessarily having to add the other side. And so that isn't something that we have on Alex yet at the moment. Um, but it's something that we would sort of like to see. Um, so yeah, it was that, and again, with the sort of with what's called Wi-Fi or you're in finance, the idea is really a yield optimizer that can move funds around a DeFi ecosystem to generate a high return. And so I think part of the idea that there would be that right now you have on Alex these multiple farming pools, and can um, you know building basically a protocol where users through it can consistently say specify a particular amount of liquidity that is to be moved to what the sort of particular pools is where they can earn the highest yield at a moment might be.
Mm,
Because the yields are dynamic. It depends on the particular cycle, how many particular users uh, are are um, are there actually staking or providing yield farming liquidity. There might be a particularly large a user with a large amount of capital that exits one cycle, and then it could increase. And this could be a pair that you're very favorable on the holding, but that the liquidity wasn't attractive before, and now that this can sort of pick up on it. So I thought really the idea is to use automation to assist users in optimizing the potential returns from yield farming, I guess, so it makes it kind of a competitive way to make yielding to make yeah, harvesting yield on DeFi platforms a likely possibility.
okay, thank you. Because when I'm thinking about that, like the issue that I think that comes off the top of my head is just that because you have to lock up your in the yield farm for a certain amount of cycles, right? So I'm wondering how you would handle that in those situations. She's trying to
Uh,
optimize. Um,
right. Yeah, and so so one is that you have the option of how many cycles you would look to uh how many cycles that you would look to lock up your yield for. Another possibility is that you have, say, a meta protocol that is actively that has amount that is locked up in multiple farms and cycles, and then sort of internally on its own is able to reallocate or synthetically recreate the yield that those different pools are generating. So it's very it's very almost like a one layer of automation above manually kind of doing it yourself, having a protocol that is scanning what those yields are, and highlighting those potential possibilities, and with additional automation being able to apply or focus your capital on those particular pools itself.
Thank you. That was very helpful.
Oh, sure.
Thanks for the question, Sole. Appreciate that. And we have about 5 more minutes. So last opportunity to get your questions in. In the meantime, I am sharing a link in the chat. Before I get into that, first, the link tree for all the Alex resources that Hadan was mentioning is in the chat here. I've also added a link to the Discord server. If you haven't joined our Ready Layer 2 Discord server yet, or Discord channel rather, please do. If you're struggling to get in there, send an email to me, adam@stacks.org, with your Discord handle, and I'll make sure that you get added to it. There's definitely lots of good information being shared. We have announcements in there. We have resources in there. I'm going to be sharing this workshop once we finish here and the recording is done. That will be uploaded to there. And it's just a better opportunity for you all to get connected with other folks. And last, we have a asynchronous AMA situation going on with the mentors in there. So starting tomorrow, Hadan was talking about Valar as a project. The first mentor that we have doing a mentor session, Matil, is hosting office hours tomorrow. If you can't join office hours, there's still asynchronous office hours happening inside the Discord, but you have to join in order to get access to it. So click on that link. If you can't get access to it through that link, email me, adam@stacks.org. I will make sure that you get added to it. And be sure to utilize the AMA feature within the Ready Layer 2 Discord channel. And keep an eye out there for any other announcements and updates that come from us. So last call for questions. If no one else has anything, we'll go ahead and stop the recording and wrap up our workshop. And I will share this with everybody later today. But I appreciate everyone's time. Hadan, thank you so much for giving us the overview, answering the questions, introducing a lot of folks here to Alex. And maybe you'll be hearing from some of these people in the next couple of days, maybe the next couple of weeks, for more insight and more questions to learn more about how to get started with Alex.
Definitely. Thank you.
Awesome.
And thank you everyone for coming in and listening in. Again, please do reach out. Would love to discuss with you guys further on a one-on-one basis, and and really see how, what I always say when people come to the Alex Launchpad, our goal is to see how can we help you achieve what it is that you're looking to do in the best way possible, and advise on that. So yeah, absolutely. Don't be a stranger. Do reach out and let's work together.
Sounds good. Thank you.